Question: will this trading system work in extremely volatile trend? Question: will this trading system work in extremely volatile trends? Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-macd.com. The title of the video is Question: will this trading system work in extremely volatile trend? Today we are recording this video tutorial to answer a specific question that has been asked by a TSTW 24 trader. And the question is very simple: will this trading system work in extremely volatile trends? All right, excellent question, very important question. All right, so traders very often find it very difficult to trade in a volatile market. Okay, so how do we trade in a volatile market? Okay, how can we use the TSTW 24 trading system in a volatile market? How can we apply a trading strategy or a trading method, all right, when we have a volatile trend? Okay, when the price is going very, very fast. Okay, I want traders to watch the full length of this video because I'm going to touch different points that are essential for traders to understand so they may improve their day trading, okay, when they are using the TSTW 24 or any other trading method or strategy. Okay, so first thing first, okay, what is a volatile market? Okay, a volatile market is a market that is unpredictable. So the price will go up, people think it's going up, and the next minute the price is going down. It's a volatile market, it's going ups and down. So 1 minute, the price is going up, another minute it's going down. A volatile market can also be a price that is going up, or a volatile trend, the price is going up, but it's going up very, very fast. So how do we know that the trend is volatile? We will see very often long candlestick bar. So here on the 5-minute chart, you see that this candlestick bar is quite long, followed by another tall candle, and you will see a lot of long candlestick bar. Okay? So this is a volatile market, unpredictable, quite risky when we have, okay, a fast, okay, price progression or price going ups and down very, very fast. Okay. The best way, so the first solution is, how do we handle that? You may decide not to trade at all. All right. So a volatile market is a risky market, and one can decide not to trade it. So we save our money in our bank and we trade another day. We just laugh loudly and we don't want to trade it. We are not interested in it at all. Okay? That's the first solution. Don't trade. Don't risk your money. You may, if you're a conservative trader, just stay away from it. Okay? In fact, that's exactly what the professional will do. If they see that it's too volatile, especially if it's going ups and down very, very fast, unpredictable, we may decide not to trade it at all. But there is another scenario. If it's trending, it's going up in one direction, but it's going very, very fast, there is another solution. If the price is trending, so it's going up, but it's going very, very fast, okay? If that's the case, we need to go to the lower time frame. So if you see, for instance, on a 50-minute chart, it's very, very volatile, it's going very, very fast, we need to go to the lower time frame. We may go to the 5-minute time frame and see whether we may see a pullback, so we may enter the trade there. If we can see on the 5-minute time, we drop to the 3-minute time frame. If we can have an opportunity to enter the trade because it's going fast again on the 3-minute time frame, we drop it down to 2-minute time frame. If it's fast again on the 2-minute time frame, we may go even to the 1-minute time frame. So one solution, if it's trending is going very, very fast, in order to avoid, okay, being kicked out of the trade or lose money, we need to go to the lower time frame. We need to drop it down, drop down to the lower time frame. The same method is true. If it's going down very, very fast, we need to go to the lower time frame. So if you see it's going too fast on the hourly chart, we leave the hourly chart alone. We drop down to the 30-minute time frame. If the same thing is happening on the 30-minute chart, we drop to the 50-minute chart until we see a time frame where we can see that the price is breathing in and breathing out. What do I mean by breathing in and breathing out? Go up and pull back, go up and pull back a bit. But because if you're on the hourly chart going too far, we can't see a pullback on the hourly chart. We can't identify a best place to enter the risk when the risk is low. Why this is so important? Because for a day trader, the most important thing for a day trader is how to enter the trade peacefully. So you may be right that the price is going to go up, but as a day trader, if you enter the trade at the wrong time and at the wrong place, you will lose because you don't have 24 hours, okay, to control the risk. So you want to make sure that the risk is not too high and you are entering the trade at the best place at the right time. Therefore, if it's too volatile, that's why we switch time frame to find a better place where we can enter the trade. So the first solution, either we don't want to trade at all, we are not interested in it, but if it's volatile, but it's trending up or down, we need to change time frame, go to the lower time frame. Sometime, okay? Traders want to enter the trade, but at all costs. No, you don't have to. Sometime, if you see that the risk is too high, what usually happens is that traders see it's going up, I'm going to miss an opportunity, so you buy here like this. But at the time you enter the trade, that's exactly when the price is about to pull back. So they take you out first as a day trader. And then you start going up. Then you say, okay, I'll join it again. Then you join again here. And then the price pull back. And then they take you out. So to avoid losing, we go to different time frame, lower time frame. But even going to the lower time frame, if we can see, if the price does not give us, okay, an opportunity to enter the trade, we can stay out. So because the problem we are facing, the price is going very fast, everybody's buying, boom, 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 boom. Now, in order for us to buy, we want a pullback. So go up, pull back, and then going up, that's a better place for us to enter the trade. So it went up, pull back. Now we want to look for opportunity to buy somewhere here. Okay? But if it's just going up, boom, 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 up, tall candle, we're all waiting to see when can we enter the trade. But depending on your risk tolerance, you may decide to buy. It's a gamble. It may work, it may not work. So if you buy and it continue to go up, well, it's okay. But if you buy when it's going too fast, it may pull back exactly the time when you're about to buy. That's why it becomes tricky. So first solution, stay out, don't trade it. Or second solution, go to the lower time frame. So for TSTW 24, we use the first best time frame for our entry. If it's too volatile on the first best time frame, we may drop down to another lower time frame, What we are trying to do, we are trying to find a better place where the price may give us a chance to enter the trade. Sometimes the price may not give you a chance at all. Then it becomes risky, it becomes like a gamble. It's up to you. It's up to traders to trade it. Another solution is this. The first thing first, we want to know, very important, this is a very important point. When you see the price rising very fast or going down very fast, when you see that, the trend is volatile, the first thing you want to check, you want to ask this question. What is causing the volatility? All right? This will help you a lot. So you want to know first. So suppose you come to your desk and you see that the price is going fast. So we want to know why today the price is so volatile. Why this financial instrument is volatile, unless it's a financial instrument that is always volatile. In that case, we know that this is a volatile financial instrument, like silver is usually volatile. We know it's a volatile financial instrument. Okay, we have to deal with it because it's a volatile financial instrument. But if it's not a volatile financial instrument, we want to find out why, the price is volatile today. So the first thing first, if we know the reason why it's volatile, one of the reasons can be, economy news. Usually, traders are trading forex or stock. You may know that economy news, will affect the price, may create a volatility. So if we know that a major economy news is released, for instance, the non-farm employment change, or any other major economy news is released and is causing the volatility. So now we know the reason why it is volatile. My recommendation to traders, is this. wait until the volatility has stopped. Okay, usually after 1 hour or so, during a volatile trading day, you may see that it may become a bit quiet. All right, so wait for the volatility to stop or to become reasonable or controllable before you enter the trade. In fact, if you go to www.stochasticmarket.com and you click on today's a page, there are videos today's page. You will see videos there where I talk about one particular trading system, method. When we see on the hourly chart, major economy news release, the price goes almost vertical. You see here, vertical. But sometimes you will see after the volatility, the price will become quiet and we go like this. The opposite is also true in downtrend. The price may go down very, very fast, like this, in a vertical move, which is a kind of a distortion. And after the volatility is finished, the price will start going normally, go down normally like this. After we see it, I talked about this already, after the common sense trend line along this section, which is a normal decline, here a normal, rise. If the trend line here is broken, we can sell here. So we are doing the opposite. So there was a volatility, price goes up, vertical, and then the volatility has stopped, price start going up normally. Now the trend line is broken, we want to sell instead. Here, price goes down very fast. We wait for the volatility to stop. Now, price start going down normally. It's time to look for opportunity to buy. What is happening? Those who were buying before here, and now we see that now, the volatility has finished, they are likely to bank their profit, and you want to take advantage of it. So another way is to wait for the volatility to stop, 1 hour or so. Once it's finished, you come back and look for, a trading setup. So instead of trying to trade during the riskier time, you wait until it becomes less risky, and then you start trading, taking the other side of the trade. So if it was going up before, and then it completely slowed down, if you're quite volatile, especially major economy news, you see, go up like this and then go like this, you will see that there is a chance to sell. The opposite is also true in the downtrend. It may not happen in the same day. Sometimes you see the volatility will continue the whole day, and the next day you see it start going up normally, and then the trend line is broken. Or in one day the price may go down very, very fast, and the following day we see a normal decline, and then the common center is broken. We want to take the other side because those who were selling before would like to take profit, and the price will bounce up above, and we try to go up again. Here, those who were buying before, now start going up normally. They may decide to take profit, and the price may go down a bit. So we have a choice. Either we don't want to trade it at all, But if you want to trade it, and the price is trending, we must use, the lower time frames to control the risk, If, we have another choice. If it's going up too fast, we may decide to wait. We want to trade, but we want to trade, but we want to wait until the volatility has stopped. Then we will look at pattern like this, go up, and then normal vertical move, diagonal move, and the common center line is broken. We take the other side of the trade. Vertical decline to the downside, normal progression to the downside, and the common center is broken. We want to take the other side. But the key point you want to remember is that when the volatility is too high on one particular time frame, we are going to another time frame when the volatility is not that too strong. So you may notice sometimes, approach to trader, you may be on a 50-minute chart, and the price may be quite volatile. But if you go down to the 1 minute time frame, some traders even go to the 10-second time frame, you may see that the price is still wiggling, going ups and down. This will allow you to give a chance to enter the trade. But remember, in that scenario, you want to make sure that you are paying attention to the price. Very, very important. Now, I finished to say what I need to say now regarding this criteria. So for TSTW 24 trader, we will now switch to another time frame that is lower than the first best time frame if it is too volatile. We may decide not to trade it at all, or we may wait until the volatility has stopped. The bottom line is that we want to be defensive. We don't want to lose. We don't want to give our money away. The problem that we are trying to avoid, or the trading mistake that we are trying to avoid, is the market environment, the breach of market environment. There are 7 biggest trading mistakes, and one of the biggest trading mistakes is the breach of the market environment. So the market environment is risky, is volatile. We can decide to stay out. If you want to trade, we know that it's risky. We don't want to breach the market environment. So the market environment will determine the strategy that we want to apply. If it's too volatile, well, you may decide to wait until the volatility has stopped, or you may decide not to trade at all. But if you want to trade it, then you will need to go to a lower time frame. If you go to the lower time frame and there is no opportunity for you to enter the trade, don't just gamble it. If you decide to trade it and enter the trade, that's a gamble, all right? Another thing I want to clarify before I close this video, because this is an essential video for traders. Excellent question. All right. Now, the trader was telling me that NASDAQ 100 was volatile yesterday, which was the 9th of February. Now, I need to say something. Please feel free to disagree with me. I do not personally, okay? This is about me, all right? So feel free to disagree with me, all right? So I do not consider the NASDAQ 100 as a volatile financial instrument. In fact, even during economy news, it's not as volatile like the Dow Jones Index or the FTSE 100 or the DAX 30 or the CAC 40. It doesn't move too fast, and the volatility for the NASDAQ 100 is quite reasonable. Okay, it's quite reasonable. That's my personal view. That's why I'm saying to you that you can disagree completely with me, which is understandable, but I do not consider the NASDAQ 100 as a volatile financial instrument. Even the volatility that we see in the NASDAQ 100 is manageable. Okay, so but this is my personal view. So if you look here, this is the 9th of which I highlighted with the 2 red vertical line. Okay, you will notice that. All right, the price went up that particular day from the level of a 3903 and went up to this level here, 3903. It went to 408. Quite a big move, to be honest. It went up a big, but you will notice that it's manageable. What do I mean by manageable? Even here, if you are, for instance, on a 5-minute time frame, which I am now, manageable means that we can draw trend line and channel on our time frame, and we can control it. So here we are on this day. So on a 5-minute time frame, okay, the market did open right here, where is this vertical line. So we will be watching. You see here, manageable means that we still have a chance to enter the trade on this 5-minute time frame without switching. So it ran fast, so it went fast. So that's what I say to you. If you want, you can change time frame. But as I explained to you, we can manage this one particularly. So we can start drawing line on this. So here we are. Okay, trying to make it a little bit. All right. So what has happened here? Look at this point here. Look here. It went up from here. So this is before. So day before, right, went up to this point, and then pull back. Okay, here. So we have 3 points. So went up and pulled back. So the market did open here, and the trader sees that it went up, display new high, and pulled back. Now the body fast move. Okay, it's going up fast like this. Here it was volatile. Okay, but I say to you, it's manageable. We can use here. Here we are. Let's use the pitchfork tool here. Okay, powerful tool that traders are neglecting. So here on this particular day, I can decide to stay on my 5-minute time frame and just monitor. Okay, the NASDAQ 100. All right. So here with my pitchfork tool, you can see that the price was in the pitchfork tool is allowing us, is helping us to know the possible path that the price may take. Okay. So the pitchfork tool is telling us the NASDAQ 100 is likely to stay within the boundary of the pitchfork tool. Okay. If you want to know more about the pitchfork tool, go to Day Pro Traders YouTube channel. So on this day, price display a low followed by a higher low. Now it ran fast. Okay, if I will not try to challenge it here. If I don't buy it here, I will not try to force it here because it's going too fast. Okay, so I will just wait. Okay, but because this is a NASDAQ 100, I can manage this. Look carefully here. What the price has done after this move up. Okay, the price pulled back, to retest this level here. So you see this key level here on the 5-minute time frame. This is what I meant by manageable, okay? So here, so I missed this opportunity to enter the trade. Now it came out of the pitchfork tool. Now it's changing direction here, which is retesting this level. This is where I would prefer to enter the trade. But remember, I missed this opportunity because it went too fast, okay, in this session. But I can decide to stay on my 5-minute time frame because I do not, personally, I do not consider Nasdaq 100 too volatile for me. Now it pull back here. I will decide to look for opportunity to buy at this point in time here when it starts changing direction here. So when it starts touching it here, okay, because I'm seeing this on the 5-minute time frame, I can decide to change my time frame. I don't like very much the 1-minute time frame. I may decide to go maybe to the 2-minute time frame to see whether I have a chance, okay, a better, okay, entry point on the 2-minute time frame here, okay. But here you can see it went up quite fast. You may decide to join it straight away like this, which is a gamble. It's just a pure gamble because the price can pull back here. So if he went fast like this and then pull back like this. But in my view, this is manageable. All right? But that's my personal view, okay? That's my personal view. So we can control the volatility by paying attention to the price itself if we don't want to change time frame, by staying on that time frame and drawing our channel and paying attention to the hotspot trading zones on that particular time frame. So myself, at this point in time, I may decide to enter the trade here. All right? But in any case, if you want to control the volatility, suppose you don't want to change time frame, always, one thing that will always help you is, okay, the market pattern. So always draw your channels, okay, draw your channel and your, okay, key level. So if I remove all my drawing, all right, I hope this is helpful to you, what I'm saying here. But as I said to you before, one can change time frame and go to different time frame. Sometimes by changing time frame may not help at all if the price is going too far. So you can see that there was a kind of consolidation here. You see here? Here on the 5-minute chart, day before, we see this consolidation. This is a blue channel. So it touch it here, touch it back, touch it here, touch it here. And it went up to this level before. Now it pulled back. This is where the market did open. So at the beginning of the market, traders that are watching the market pattern on the 5-minute time frame knew that a consolidation was taking place here. So the market closed on the 8th of February, somewhere here. So they knew that there is a consolidation taking place. So as soon as the market opened here, aggressive traders bought it straight away. They all buy here. In fact, the day before, there are orders that has been placed here. So the following day, which is the 9th, market pattern consolidation taking place on the 5-minute time frame, here was a place to buy. Okay, so trader bought it, price running fast. Now, when it reaches this level, it didn't change direction this time. It went above it. So in that case, we can just wait. If it's too volatile and you want to stay on that time frame, you just stay on that time frame, drawing your channel. So here, price out of this channel, market geometry, multi-talented trading. We project the width of our channel, and we see that this is a possible reversal zone. So it was consolidating in this channel here. Now it break out of it. Destination here. Professional know that. So if you know a bit about market geometry, I will be, if I receive a sell signal here, I will be interested in that because I know that trader that bought it here, they know that if it goes above this channel, the next target is here. So if I see them, they are selling, I will sell here. Okay? So drawing the channel and the market geometry, projecting the channel, we can make excellent decisions. But now, as the market did open, they took profit here. Price pulled back. Where is stopping? Stop near the median line of our first channel. This is our blue channel. So this is what I'm saying. If you don't want to change your time frame, remember, whether we are using any technical indicator, we must trade the price. So now, price reach this level, which is the target zone. In fact, one can look for opportunity to sell here because you can see that a gap down here. Some people sold it here. price return back to the same zone. In fact, it's a target zone. I will be willing to sell here too. Now, price came back near the median line of the first channel. That's where, okay, remember our pitchfork tool that I draw first, which is also somewhere near the zone, and the price bounced up a bit. But finally, again, we have a new channel again here, which is this one, okay? So price display, okay, finally display, okay, a lower high. So those who sold it here, these are bear, price display a lower high, they continue to sell it down all the way here. Yes, it was volatile here, but we can control it. Just carefully, be very patient if you want to stay here. Draw the channel, project the channel. If the price is out of the channel, project it. Draw your trend line, pay attention to the market pattern, and you'll be all right. So today, which is the 10th of February 2016, so the market did close here yesterday. So we have again a line on our 50-minute chart. So this is the line. Okay, this new line. Okay, let's color it now into orange because I have too many lines now. I'm going to wrap it up soon, but I want you to get this clearly. Okay, so here we are. So market, okay, is open here. Once again, you can see that there are some, these are high frequency traders. This here again, that was a high frequency trader because they see the market pattern, boom, they just buy, push it, target zone, they came out here, here they buy it again, okay, and so on and so on. You have to understand also that the media line of our top channel, they sold it again in that zone, okay? So the top channel, the media line is somewhere here. So after a D below went back, they took profit here. All right, the media line of the top channel. So here you see, they are not just selling, they are buying and selling carefully. They bought it near this media line, they sold it near this media line, price come down near this one, and they push it back down here. Again, now we are out. Today again, we have again a channel, 3 point. All right. So on any time frame, okay, one should not breach the market pattern. So draw a channel, all we need is 3 point. Okay? All right? So I hope this is useful to you. All right? So we have a channel like this. So this is today. All right? So we will draw this channel as the market opened today. So touch it here. So market is open today. See, it gap up. So they bought it just before the market was closed. These are high frequency traders. They bought it here. Right? Gap up today. This is the channel we are watching today, which is the orange channel on the 5-minute time frame. If you want to control the volatility, we don't want to change time frame. Once again here, the price out of the orange channel, today it went above it. So we will do what? We will project the channel, multi-talented trading. I recommend to trader to go to www.dayprotrader.com and to check the page that we called, okay, the biggest trading mistake. These are, so here, multi-talented trading is the breach of multi-talented trading, or the zero multi-talented trading is, okay, one of the biggest trading mistakes. All right. So here the price out of our first channel, okay, we project it again, equal size. Okay, here it is. Here we are. And when anytime you draw a channel, always remember the media line also. Okay, you don't have to draw them, but just be aware of the media lines. You see here, okay, here they push it down near the media line of the first channel, and they push it again to the edge. They are sold in. Now here we are now. This is a live a chart for the NASDAQ 100, okay, the channel, okay, the channel. So the projection of the channel will allow us to know where is the best place. As a day trader, we want to know where is the best place to buy, where is the best place to sell. And each time we are paying attention to the market pattern. Here, it was in a declining channel. Okay, we just keep doing that, okay? You'll be amazed, okay, how your trading will improve. If anytime you want to buy on the edge, you want to sell on the edge, paying attention to the channel. So this channel that I draw now, which is the blue one, I can project it also because the price is out of that channel. You see the blue channel here? The price is out of that channel. Okay. I measure the width of the first channel, which is this one. It's out of it, I project it. And so on and so on. Multi-talented trading. For new traders, this can be a bit, okay, of a challenge for new traders, the market geometry. But just try, okay, slowly but gradually, okay, to do it, okay? Do it gently. It's out of it again, we keep projecting it. All right? All right, keep projecting the channel. We can do this if the volatility is too high and we don't want to change our time frame. All right. So, all right. It makes sense. I hope I have answered your question. If not, all right, you can get back to us in due course. Okay, we'll record another video to clarify a few points. This is about, okay, will this trading system work in extremely volatile trend? In an extremely volatile trend, one can decide not to trade at all. All right. If one wants to trade it, one should make sure that the price at least is trending. If it's not trending, but it's volatile, you may decide to stay away. All right? You may decide to stay away. But if it's trending and you want to trade it, you need to go to a lower time frame. You drop it down, drop it down, drop it down, looking for a time frame where the price is going a little bit ups and down, when you can draw a channel and see a pullback. If you change time frame and you can't see any pullback that on the edge like we are doing here, okay, then don't trade it, okay, don't force it. If you decide to join the trend because it's going fast, it's a gamble. It may work, it may not work. Another thing that we can do, if it's too volatile and we know the cause of the volatility, we may wait until, okay, the volatility has settled. It may take 1 or 2 days sometime for volatility to settle. Price goes down very fast, and then the next day we see a normal progression, a trend is broken, we take the other side. Or we see a volatile, okay, bullish trend. The next day we see a normal progression, and the trend is broken, we take the other side of the trade. All right? If we do not want to change time frame, we are the family time for instance, and the price is volatile, we don't want to change time frame, we need to start drawing line, channel, projection, support, resistance level, and to see whether the price will give out another chance to enter the trade on the edge. In all cases, a volatile market is a risky market. Okay, the market environment is not suitable, all right, it's risky. One may decide to stay away. If one decides to trade it, one must control the risk and be very, very defensive. The trading system does not trade for traders, but help traders to trade. So we are the decision makers. So we see the market environment, okay? If the market environment is not suitable, we trade another day, all right? But we may say, okay, well, I want to trade. Then we are aware of the risk, and we become very defensive, and we manage the risk. Sometimes the price will go too fast, and you can't catch it, okay? You can catch it. If you want to catch it, you may just jump on it, and hopefully it will work out beautifully, and you will get paid. Sometimes, okay, the time you enter the trade, maybe the time the price is pulling back. In that case, don't play with it many, many times, okay, and lose many, many times. If you have one losing trade, you may decide to go away and come back another day, okay? This is the end of this video. To answer a specific question that has been asked by, okay, a TSTW 24 trader, a very important question: will this trading system work in extremely volatile trends? This is how we can use any trading method in a volatile, okay, a trend. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders, okay, answering a specific question: will this trading system work in extremely volatile trend? Speak to you soon.